Welcome to ZE and AgriSensus training on AgriSensus. This morning we have with us Andrew Goodwin, who is the Managing Director at Sensus Commodity Data, where they are the creators of AgriSensus and EnergySensus. They're based in London, England, and I welcome Andrew to ZE Power Group and our team to learn all about your data.
Hi everyone, thanks for dialing in. I want to very briefly introduce you to AgriSensus and EnergySensus, the two brands that we have within the Sensus Commodity Data Group. So let me first of all start off just by introducing myself and the company. So I've been in the commodities industry, commodities information industry for 20 plus years. Initially starting out in the steel world. I was in the steel industry and then a stint at a steel information service, which was acquired by Platts, and that was in 2011, when I really started to understand about commodity information and the value that certainly the pricing data can hold, and also about how companies such as Platts and now Sensus work with channel partners such as yourselves to vend the data. We set up Sensus Commodity Data because we saw a really good opportunity, which we actually saw whilst we were still at Platts, in the world primarily of agriculture, and biofuels we'll talk about in a second. But agriculture is really where the majority of our focus is and the majority of our customers are right now. And the reason why agriculture is interesting is because even though it is one of the world's oldest industries, if you like, it's changing very rapidly in terms of the way that the agricultural supply chains are traded. Previously, everything tended to trade and price off the futures exchanges, particularly Chicago or CME-owned exchanges in the US Midwest, so Kansas and Minnesota, etc. And that's still very much the case for the US market, but increasingly there are large volumes of wheat, corn and soybeans, which are the main three bulk agricultural commodities that are traded, which are being grown in parts of the world that are a long way from Chicago, such as Brazil, Argentina, Australia, and they're being shipped to the other side of the world, primarily to China, which, like most commodities, has been kind of sucking up all the excess commodity supply over the last 15 years or so. And in the case of soybeans, almost all of the exports of the world's soybeans go to China. So the traditional pricing mechanisms of using the Chicago-based exchanges are increasingly becoming irrelevant when you are pricing transactions that go from Brazil to China, for example. And hence there is increasingly a need for new reference prices, which we hope eventually will be adopted by the markets and used as physical benchmarks and physical contracts, and also used to settle financial derivative contracts. So our whole mission, Sensus Commodity Data, is guiding kind of what we get up every day to do is to try and provide the market with market moving news and price information, and the prices for those to be increasingly used by the market and referenced in contracts. And of course, when I say used by the market, there are many different parts of the market or many different roles within the market that you guys will know much better than me in terms of the usage of that data. So it'll be right the way through from your front office trading departments, your analysts, certainly your risk managers, and a whole, accounting, settlement, etc. All the kind of roles that you guys will be very, very familiar with from your existing customer base and product suite. And it's no different for our information. The difference is that in agriculture, this hasn't necessarily been something that, price reporting agencies' prices haven't necessarily been used in the past. So that's really the big difference. Let me jump straight into the service. So we have three main groups of content. Firstly, news, which is pretty self-explanatory. Prices, again, pretty self-explanatory, and data. The reason why we have news is because the news supports the pricing data. So the news gives evidence for the prices. And I can show you that in a second. The other reason why is because as a young company, and we've been going, by the way, for just over 2 years now, but as a still a young and growing company, we need to sell our product. And if you just publish prices to a marketplace that is slowly but surely adopting prices, but hasn't yet necessarily decided that they're going to need those prices, then the demand for your prices isn't necessarily there. So you need to have news and data and other bits and pieces together in your product to make it a sellable item. So that's what we do. So if I have a look at the website, firstly, yes, this is the home page that you'd see. So you can see on the right-hand side here are the headlines. Everything we publish appears as soon as we have published it, it will appear here. And you can see that in an average day, we will probably publish round about 15 to 20 different pieces of news-related content. So if I click on this one here, you can see all of our articles are about this length, 300-400 words, and we're trying to enable people to, as quickly as possible, absorb the key facts that have just been announced or just happened in the market that will ultimately have an impact on supply and demand. Because price is always a function of supply and demand, and therefore giving people the facts around how supply and demand has changed or may change going forward, depending on what has just happened, will allow people to also make their own conclusions as to what the prices are going to do going forward. So you can see here, I'm just going to quickly scroll through our typical articles linked together. This scrolling goes on forever. With lots of related articles. It's very easy to find content, but it's kind of typical price reporting agency news. In addition to news about the different products, and the products, by the way, are wheat, corn, soybeans, barley, and then veg oils and meals. So the veg oil is basically when you crush an oil seed, of which soybean is the vast majority, but there's also sunflower seeds and rape seeds, otherwise known as canola. Then you get the corresponding oil out, and you also get the meal out. And we'll have a look at those when I go through the pricing. But as well as the news, we also have market commentaries. So at the end of every day, we will write a market commentary for each of the main areas: wheat, corn, soybean, veg oils. And if I click on one of those, then you can see a typical market commentary would look something like this. What we're trying to talk about here is specifically what has traded in the market today, where is the futures market, how has that impacted the physical market or vice versa. And we try and summarize the whole global wheat market in the space of that 600 words or so, which is very difficult to do, but essential that we do that, because as I say, this supports the pricing. So here, for example, we're saying the best bid for Russian 12.5% protein for loading came in at $185 per metric ton for Black Sea pork. In Ukraine, offers for 11.5%, heard between 185, 186, etc. This is the evidence that I was talking about that backs up the pricing. So we need to show that the reason we have published a price assessment at, let's say, 187 is because we heard there were some bids at 185, we heard there were some offers at 188, and therefore we applied our methodology and came up with the price assessment. And that's very important for us to demonstrate. So news is super important for us. What is arguably even more important are our prices. So in agriculture, we have approximately 600 daily prices that we publish. And you can see here again for the main areas of wheat, corn, soybeans, barley, veg oils, and meals. And then we also do weekly freight indications and something called a crush margin. So let me just go through briefly some of those things. Wheat is probably the most interesting product within the whole agriculture space because wheat is less of a commodity than anything else, in that there are a vast number of different grades of wheat. So there are the protein levels, and you can see here wheat FOB as of 10.5%, 11.5%, all the way up to 14.5%. And those protein levels will determine what each grade of wheat is suitable for. So if you're making, if you're baking and you're making fine pastries, then you will need a certain protein level. If you're just making very rough bread, then the protein level could be substantially different from that. If you're making pasta, in the case of durum wheat, then your protein level will be incredibly high, 18% or more. And the percentages are going to be reflected of the price and vice versa. So each of these can be thought of as a different product in its own right, which is why here, for example, from the Azov Sea in Russia, we're pricing 4 different differentials of protein, and they range from $165 per ton to $180 at the present time. So we will be adding, by the way, a lot more wheat prices, probably another 10 or 12 different price points for wheat in the next few weeks, which is very exciting. I would say that we have the most comprehensive global wheat price database that exists. And I'll talk about the competition a bit later on. But yeah, this is what we do on a daily basis, make price assessments for wheat, for corn. You can see here the big regions for corn are, in terms of the growing regions, for all the products pretty much. It's North America, which is really the US, wheat in Canada. It's Brazil and Argentina. And then it is consumed largely in Asia. Well, obviously, it's consumed everywhere, but in terms of where it's shipped to, Korea is the huge purchaser of corn. Vietnam, similarly. Ukraine is another big growing area. So Ukraine, Russia is kind of the European breadbasket, if you like. Soybeans, like corn, is a very homogeneous product. So a soybean is a soybean is a soybean. There aren't really too many different grades. There are 2, and therefore it's all about volume and price when it comes to soybeans. And we price it coming out of Paranagua, Brazil, price it coming out of Argentina and out of the US, and as I say, it all goes to China. And it goes to China, in case you're wondering what the Chinese do with hundreds of millions of tons of soybeans, to feed pigs primarily. So it's ground up into soybean meal, and which is very high in protein. That is then used to feed pigs, and the pigs are used to feed the people. It's as simple as that. And it's cheaper and easier for China to import soybeans all the way from Brazil or the US than it is to try and grow them itself or find some alternative source of protein. Barley is pretty self-explanatory. And vegetable oils, we like saying soybean oil is the big one, and then there's sunflower oil and rapeseed oil as the other key products. And similarly with the meals, soy meal, sun meal, and rape meal. Rape, by the way, I appreciate it's a funny word. Canola is actually a made-up word by the Canadians, and canola means Canadian oil. And I guess there's sensitivities around the world rape, whereas in other languages in Europe, such as German, the word for rape is Raps, and clearly that doesn't have any funny connotations. So I guess that's why it's called different things in different places. Now we also give freight rate indications. These are weekly, and we try and cover the main growing parts of the world to the main consuming parts. So from the Black Sea to North Africa, Asia, etc. Brazil to Northeast Asia, Argentina, Northeast Asia, US Gulf, Pacific Northwest. The reason why we only do this on a weekly basis is partly because they don't really change so much, and partly because it's not the key focus of our efforts. Our efforts are on understanding the underlying markets for the commodities themselves. But freight is increasingly a very interesting component of the overall price, and something that, again, we will be publishing a lot more freight differentials going forward. And finally, crush margin. This is at the moment just for soybeans. So if you crush a soybean, then you get soy oil and soy meal out, and your crush margin is an indicator of whether it's a profitable business to be in, basically. Now I'm just going to plot those here, change it all into metric tons per US dollar, which most pricing is in, but for the China, it was in Chinese RMB. And there you can see that US companies who are crushing soybeans, their crush margins are way higher than the next highest, which at the moment is China, followed by Argentina. And you can see in Brazil, the current levels are minus $12.50 per ton. So that tells you that for every ton of soybeans that Brazilian companies are crushing right now, they're losing $12.50. So, not a very profitable business. US is always profitable, and I think that's because it's a very large market, both in terms of supply and demand, and it's able to balance supply demand very well, and therefore run their mills extremely efficiently. Whereas China is a big importer, Argentina is a big exporter, and Brazil is a big exporter. It's a lot harder to get that balance, and you see a lot more volatility in the crush margin. So that's probably enough about the pricing data. I'll very quickly run over the other data that we have, just so you're aware. So tenders. In the world of ags, a lot of product is bought at tender, traditionally by government agencies, and we keep track of those tenders. As far as I know, we're the only people really to have this kind of depth of database, certainly that is that you can interrogate like this on a dashboard. So at the moment we've got 632 tenders, so it tends to be a few every week that appear. Tenders are very important for the market, and it looks like this isn't going to load up, I'm afraid. And we have more data than anyone else on tenders, and our subscribers are free to download the data and play around and do whatever they like with it. If I go on to the crop forecast, again, very briefly, these are not our forecasts. These are forecasts that government agencies have done when they are trying to predict how much the crop is going to come to in the next harvest. So we just simply gather those together and put them out on a table like this. So the USDA, for example, puts out a forecast. This is the Brazilians, this is the Argentinians, etc. So we're just trying to make it easy and convenient for our customers to find all of this very useful data for them. Export dashboard, the last bit of data I'll show you, see if this one loads up. The export dashboard is simply taking government statistics of exports for wheat, corn, soybeans, veg oils, meals, barley, and making sense of them all from the key nations of EU 28, Russia, US, Ukraine, Brazil, and Argentina, and putting all that data onto a dashboard that people can interrogate, they can download, they can drill into, they can do all kinds of clever things with. It looks like, as I say, internet is not great here where I am, so it's not going to come up. But this is a really useful dashboard. It's useful partly because we do a good job of cleaning very complex data, putting it together and so that it makes sense. And it's also useful because we keep it right up to date. As soon as data comes out from the Argentinian ministry or the Ukrainians, we will get that and pump it out into the dashboard. I am going to quickly flip over to energy sensors. So this is the second brand, if you like, that we have in the portfolio, and I'd hope over time there are many more. Energy sensors is very similar in terms of the type of data and certainly the look and feel of the way we've laid it out on our site, and it's also a subscription service. I'll just go straight to the pricing. So what we are pricing for energy sensors are two things, and that is the certificates that you can get for biofuels. So they're called, and these are UK certificates. So anyone who's selling to the UK market, if you've got any biofuels customers, this is particularly interesting for them. It's the RTFC, which is a Renewable Transportation Fuel Certificate. Right now, price is 23 pence per certificate. It's like, if anyone knows, the RINs in the US market, Renewable Incentive Certificate, I think they're called. So we plot those, we do a weekly price for those. We're the only company to do that. We also have other biofuels here, prices of, so Eucami is used cooking oil methyl ester. It's literally, after McDonald's has finished frying some chip fat, then they will sell that chip fat or fry fat to companies who convert it into Eucami methyl ester, and it can then be blended into the fuel transportation mix, so blended into diesel or into petrol. Similarly, Fame Zero is a biofuel. RME is rape methyl ester, so rapeseed oil methyl ester as well, and we price all of that. So very similar service, and then we've just added actually a brand new dashboard of the RTFC, the certificate, supply demand data, and the biofuel data, which is available. To see if this comes up, available for people to, again, download and interact with on our site. So that is the data and the prices. Very briefly, I appreciate we're pushing up against time. I'm just going to flick back actually to the agri side. And in terms of how we collect all the data, well, in terms of the pricing data is probably the most important. I'm just going to get the freight back up there. We collect the data just like any other price reporting agency. We talk to the market, to buyers and sellers and potentially brokers as well in the middle on a daily basis, and find out the levels that all of these commodities in the different places have been bid at and offered at throughout the day, and where trades have taken place or what level trades have taken place at. And we will apply the methodology that we have to create price assessments. And it takes a lot of data. We don't just rely on one source, we need many sources for every single price that we will publish. And it takes a lot of experience and skill and knowledge of these markets to really understand the nuances of why a price should be where we've set it. And it's not always as obvious as it seems. The team that we have, by the way, are all ex-Platts, with a couple of exceptions where they've come from Argus and other price reporting agencies. That goes for our salespeople as well as our editors. So they're all super experienced. They really know what they're doing and are very, very good. And in terms of competitive advantage, if you have one of your customers says, well, I really need some ag data and I don't know whether to go for Platts or AgriSensus, the big difference, I think two differences. One is that for most of the products, actually, we've been going a lot longer than Platts has. so our price history is longer. That's not true of some of the wheat in the Black Sea. We were the guys who started the wheat service for Platts, by the way, so we know all about it. But we have, as I say, about 600 daily prices. That's spot prices. Now, I'll also show you, again, something Platts doesn't do is we publish forward curves. So if I click on here, the forward markets, you can see that there's something called an APM, that is our AgriSensus price marker. So that's our spot price. It's a bit like Platts' Brent crude for oil. That's the price we want people to be using and referring to in their contracts. However, we do also assess up to 9 months forward. So these are assessments made yesterday. Later on tonight, it will be today's after we published, and we normally publish at about 6 o'clock our price assessments. And these are assessments made yesterday for delivery of these cargoes in 1 month's time, in 2 months' time, etc., all the way out to 9 months. And we do that for pretty much every market where there is a forward curve. Now, not all markets trade forward, in which case we obviously can't, but for a lot of markets, we do allow that. We do have that, rather. The other things that are very important for us to say to you are, and I'm not quite sure how you guys do things, but all of our subscribers, if they want to, can receive the data via an API feed, and obviously they'll be getting that through the ZE platform. We would feed it to ZE. They also have the right to use our data however they like. So we give them market data license, allows them to put the data into their contracts, their trading contracts. They don't need anything extra from us as long as they've taken out the subscription. I think, Michelle, if you're listening, I think we'll leave it there.
So I want to thank you so much, Andrew. This has been very, very informative, and I hope our sales team has learned a lot about AgriSensus and EnergySensus. In the meantime, thank you everyone for listening in, and Andrew, thank you again, and we will connect with some more training again later.